Hello and welcome. You're watching India Market Open. It's midweek, and despite weak global cues, guys, implied Nifty still indicating to a 7th straight day of market gains this morning.
We're defying all odds. We're defying all odds if you look at what's happening around the world. But India is literally on its own trip. Fantastic close yesterday, right in the fag end. And Agam, you're betting that we're going to continue seeing that momentum?
I don't know if the momentum will continue, but we're certainly going to see the Nifty and the Bank Nifty remain where they are because of HDFC Bank's contribution now starting to come through as far as maintaining these indices are concerned. I'm going to, of course, talk a lot more in detail about this, but HDFC Bank's recovery is a positive for the markets.
So another question is, how much can Shashi talk fuel the change in sentiment on HDFC Bank? All that and more, of course, on the trade setup. But let's quickly take you through what's happening across the world in the global cues that are going to matter. So global cues aren't that positive, frankly speaking. And in US markets, what's weighing down is your tech stocks. Valuations have run up massively, and the key culprit there would be NVIDIA. In fact, the Nasdaq closed, nearly 1% down, over 140 points. Now, NVIDIA, ahead of its numbers, of its quarterly results, dropped about 4.5%. But put it in perspective, just in 2024, this chip maker has run up 40%. All the mega caps have run up massively. So what you're seeing possibly is a bit of profit booking. You saw in that sense the 10-year also ease off, back below 4.3% on the 10-year treasury. So a bit of relief over there. Remember, it's a truncated week of trade as far as US markets are concerned. On crude, an interesting play. Crude has actually slid, and one of the reasons could be where you're not seeing that much firmness, at least in the Brent. You're seeing the NYMEX rates right now, but at least in the Brent, is because gas prices have plummeted in the US. Because of El Nino, they're expecting a warmer winter. You're going to see cheaper gas, and then perhaps demand for crude will not go up as much as well. Asia is the other one that we should pull off before we get to what's going to happen domestically and the trade setup here. Asia across the board is looking mixed in a sense. Japan a little weak because business sentiment index has come in quite lowest since April last year, actually. Hang Seng in the green. So mixed cues in Asia. Perhaps we will beat that overall trend and look at a positive start here. At least implied open is showing a slightly positive start, Agam.
Yeah. So a bunch of things that we want to address here. Firstly, that sure, we are at life highs at the moment, and we are looking at a little bit of momentum, but the traders around now are not as convinced of the sharp up move because of valuations, as well as, well, several other challenges with respect to the market, and perhaps some amount of consolidation is also on the cards. But what is also positive is that the base around 22,000 has been further strengthened, and that's indicated by further put writing. Moreover, on the higher end, your higher end of the range has also shifted higher, and now we're looking at some amount of resistance, perhaps around 22,500, 22,600. And this is not just pertaining to this week, but also perhaps going into the next week. But as I've suggested, a lot of analysts out there are of the opinion that the Nifty perhaps would not move up substantially higher from these market levels, but consolidation is not out of the question at the moment. Now, the big move in yesterday's day of trade and the outperformance came from the Bank Nifty, and that was largely on account of HDFC Bank. The Bank Nifty moved above the mark of 47,000. It also moved and broke out from a certain range it was trading within over the past 10 to 12 odd sessions. And now that it is closed above 47,000, the question is that can we expect a little more short covering? A lot of that was on account of HDFC Bank. In fact, HDFC February futures open interest declined by as much as 8%. And as we know that it was the top contributor as far as the Bank Nifty and the Nifty's advance yesterday was concerned. So we certainly are looking at that little bit of strength building in it. And we are in fact looking at advances for Kotak Mahindra Bank as well, which contributed to the rally along with Axis Bank and ICICI Bank, which have been relatively stable of late. So That perhaps at the moment is providing the bulk of the support to the key indices. The question really is that are we looking at consolidation, and if we are, can we expect the seas of volatility? That's something that we're going to keep an eye on.
Just to bring in HDFC Bank, Agam, you talked about how that was the key contributor and potentially could be a big contributor to the Nifty, even if it has to sustain at these levels. And it's not FIs. For the longest time, we've talked about how FIs are the ones that actually like stocks like HDFC Bank, and the DI interest has largely been across the broader markets. But to just put numbers to this, it's not just the FIs. You had Parag Parikh that increased its stake on HDFC Bank as of the end of Jan statement by about 23% to be precise. You had a whole bunch of PMS, so Unify, case in point, increased their exposure to HDFC Bank. You've had a whole host of other mutual funds, PMS, have actually gone out and increased allocation to HDFC Bank. So this time around, the story about this bank is not about FIs and the love that they have for the counter. I think it's unanimously talked about of how HDFC Bank is attractive or was attractive at 1400.
So the big takeaway is smart money is back on HDFC Bank, and one way or the other, you're going to see that.
Yeah, and I think it's about time, and I think the management has done whatever. They were very. I mean, they also, I think the street's got to be empathetic now, right?
Yeah.
They've told us and they've indicated that there were mistakes made, communication was a challenge, and they will fix all that. And I think that's what investors are taking heart from. That's the HDFC Bank story. Talking about the markets, I do agree. It's going to be maybe an extended period of consolidation, largely because there are no more triggers left. You've got the elections, which is still a few months out. You've got earnings that's behind us, which have largely been in line. I saw a Citi note this morning that said that FIIs or FPIs are waiting on the sidelines. So while India looks very tempting, there is a strategic story, there is a long-term play that's underway, valuations still look very stretched. So they will be on the sidelines until either there's a price or a time correction. And I think while a price correction, not necessarily, but a time correction at this stage may be warranted. The VIX continues to remain above 16. So while the trend has been pretty solid for the last 6 days, the VIX at 16 is what may give a little bit of room for some easing coming in on the markets. But let's take you through stocks. Lots of counters to watch out for. It's the last few earnings that we've got, and it's ABP that reported numbers. A pretty solid set of earnings coming in from ABP. Revenue was up 13.6% to come in at 2,757 crores versus 2,426 crores. EBITDA was up 14.5%. Margins were also flattish, so they were at about 15.13 versus 15%. Net profits saw a jump of nearly 11% to report a 338 crore profit for the quarter versus 305 that was seen in the same quarter last year. So you want to take a note of that. They also approved a final dividend to the quantum of 23.8 rupees per share. So looks good for ABP in terms of earnings. It would be a stock you want to watch out for. It's been an underperformer over the last 6 weeks, but a little bit of gain could not be ruled out in today's day of trade. The other few that you want to watch is Hindalco. Remember, the stock had lost 12% post Novelis reporting its earnings a week ago. The concern on Novelis was not really the earnings, but the cost and delay in their project, which led to the counter losing over 12% in the last 1 week. What you want to take note of this morning is that its crown jewel Novelis now is going to be seeking approvals for listing on the US markets. Now, what this will mean for Hindalco, we will of course break it down for you and talk to an analyst to understand what this is going to mean. Hindalco, remember, is the only stakeholder in Novelis. Novelis is a market leader in aluminium cans worldwide. It's been a solid performer. The business has also changed since Hindalco took over this company. Big money will come in for Hindalco. Now, the valuations, whether or not this money will be paid out in the form of some dividends to investors is something we will discuss. And the timelines, of course, are a few other factors that you want to take a check of. But for now, all we know is that they've applied for a listing. That's all the details we have in terms of reporting. Well, Devyani International, smaller one, Yum, which owned 4.4% stake in Devyani, is looking to offload that through a block deal. Remember, Yum is the owner of KFC, Pizza Hut, and Taco Bell in India, and Devyani is the franchise distributor for these products. The business model will continue, but Yum will be making its exit. Maybe viewed as a positive on the street because 4.4% is not a significant stake, and this overhang may be now finally coming to an end. But we cannot stick our neck out and say that this will move up. There could be a little bit of a negative trade on the counter before which it starts moving up in the medium term. I want to talk about Minda Crop and pre-call in a minute, but I think we'll finish the other counters and then jump back in.
Yeah. So just focus a bit on Z, because what whirlwind moves this counter has been having, and we reported yesterday when there was a story that they're looking at renegotiating the Z-Sony deal. We reported that those conversations are ordinary conversations that their lawyers are having. The company then clarified to the exchanges that no such talks are on. But there is another Bloomberg report which might sour sentiments further for the stock, which ran up nearly 8% yesterday, which says SEBI has found a large diversion of funds. They clock it at 20 billion rupees. And remember, that's something that SEBI is anyway investigating. So that might add a bit to the negative sentiment. DLF is the other one that we should watch. And DLF had a pretty good run yesterday on the back of, you had financials and you had real estate performing decently. So the news here is that one of their units has signed a pact with Access Trustee Service. They're going to acquire about 29 acres of land parcels in Haryana for 1,200 odd crores, 1,241 crores. This transaction is going to be facilitated by redemption of bonds that the company is holding. So that's about 775 crores there. And earlier they acquired bonds worth 825 crores via mortgages on land parcels in Haryana. So that Haryana expansion and that Haryana aggressive move might be looked at as positively. Swan Energy is the other one. They're going to raise money. So, that's typical of a bull market where you have fundraising. So a QIP, it will raise about 4,000 crore rupees for Swan Energy. Floor price is at 703. For the QIP. Stock is at 751 right now. The proceeds are going to be used for investments into units and for repayments or prepayments of borrowings as well. And Systematics is managing that deal. So Swan is one that you should keep on your radar as well. Agam, what's on your list?
So Swan Energy is a very interesting one because it's grown about 6 times in just 1 year.
Absolutely.
So, of course, it wasn't my radar until you spoke about it. But besides that, we are looking at Deepak Fertilizers. What's really interesting is that we've seen a sharp surge in volumes yesterday. It was up as much as 4%. And, well, a lot of this, in terms of the volumes delivery, we are looking at some interesting moves here because volumes at 16 times 3-month daily average, delivery volumes at 5 times 1-month daily average. And remember that Deepak Fertilizers has seen a lot of weakness of late. And considering the way things have panned out for Deepak Fertilizers and the kind of buying that came through in yesterday's day of trade, the question really is that whether or not we have seen an end of that week period, and can we now start seeing a little bit of an up move, or are we looking at some amount of mean reversion? Based on that, the support could perhaps currently be at around 480, 490. That's the lows of the previous few sessions. So that's something that we'll be watching out for. And the other stock that I'm keeping an eye on is Sundaram Finance. This one made a life high yesterday. It was up around nearly 8%. It broke out of a near 7 to 8 day range. And of course, we are looking at intraday volumes highest in 3 weeks. Once again, the support will be perhaps at somewhere around a 2-day low of around 182. But don't forget, the company also ran up after its Q3 earnings, where it saw a good 24% growth in its net profit. And that perhaps is the reason why a lot of investors are looking to buy into well, something like a Sundaram Finance. So these are the other 2 stocks which you can keep on your radar in today's day of trade.
Yes.
Just a couple of more that I would add, Agam. One is Wipro. Remember, the entire tech pack was fairly weak yesterday.
Yeah.
And Wipro, though, a couple of interesting news points which I wanted to put focus on. One is that it's in a pact with Intel Foundry for collaboration on chip design and process node development. And at least as far as our Indian IT biggies are concerned, how fast are they moving in the direction of, an NVIDIA, AI, chips, etc., is going to be on the radar. Second thing is that it's expanding its pact with IBM as well to establish a centralized tech hub to offer new AI service and support to clients. They've launched a Wipro Enterprises AI-ready platform that will leverage IBM's Watson AI and data platform to create enterprise-level, fully integrated and customized AI environments. LTI Mindtree had a similar story yesterday where, they've got their own AGI for procurement. It's going to cut costs. And the AI play on tech companies is going to be key to watch, at least from a medium to long term. Just quickly, a mention on this note from Morgan Stanley on Hero Motor, because Hero Motor took quite a tumble during closing yesterday, and especially in the fag end of it, frankly. So Morgan Stanley says that they believe the share price will fall relative to the Nifty over the next 30 days. So a bout of weakness then. If you look at the line chart intraday, quite a bit of weakness. It closed near its day's lows, 4% down. So the stock has outperformed Nifty by about 13% in 2024 so far, and trades at 21 times FY25 PE. The retail market share is also pretty decent, but there's limited valuation support, and slowing sales is a concern. There was Vahan data which came out yesterday, and remember, Vahan data is the actual registration of vehicles bought and sold. So a little different from what FADA and the companies themselves put out. This is actually what people have bought instead of what's perhaps lying in the factories or in the showrooms, and that showed a bit of slowdown. So that muted the mood for a Hero and a Bajaj as well. So those are a couple of stocks we need to watch out for.